Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 8th of July. So I've certainly seen a big week in the movements on the euro in particular this week, and also the indices have made a bit of a comeback as well. So we'll jump straight in and see if we can identify any trades for today and early into next week on this non-farm payroll Friday. So we'll start out here with the Aussie USD. Look, we've had a really big sell down, obviously, this week. You can see that we've had basically mixed results over the last few days because we are basically ending up at the same place that we were, 3 or 4 days ago. But it certainly did its best to really try and push down. You can see we got down to as low as, 67, almost 50, really. The dollar index was showing a lot of strength this week. There's no question about that, and still is. But this one has started to turn around a little bit. And you've really got to go to the smaller time frames to identify any potential opportunities of that switch. You can see here on the 4-hour that we've been starting to slowly pick up the momentum on the way up. You can see we've leveled out down here at around that 67, 50, 60 area, and now it's starting to get trading above the 20 moving average again on the 4-hour, and it's trying to break past the 50. Now, this is a pretty important zone for it because, look, realistically, it's trading above 68 again, and that sort of 68 to 6900 level, which is this area here, is really the key zone for it. It needs to break that portion of this chart to really start to isolate and move up any further than that. And we've seen enough strength down here to know that really it's created a bit of a zone. So the way we're going to look at trading this one is effectively lining up the bottoms that we've got there and keeping our top line here around that 69.20 as it is, really, because we know that's a pretty important level here. You can see we've got support right through here, and we had resistance there as well. So if we do break above the 50 moving average, what we'd be looking for here is a move up to that 69.20. So we're still in scalping mode, obviously, on the Aussie. We're not going to be doing anything too fantastic on it because realistically, it needs to break out of this little mini zone. We've already had the big shorts. So drawing it up on a 4-hour, you can see we're right in the middle of the channel that we've just established. We know we've got very strong support, and we know we've got resistance. So a break above the 50 moving average, and I think we can start trading it long up into the 69.20 area. So it's around about 100 pips from here, but in reality, though, it's got to break the 50 moving average. So you're talking about maybe a 40 or 50 pip scalp by the time you get in. But that's the way I'd play this one. Look, if the 50 moving average holds it and it starts to trade lower, and we see a series of lower highs and lower lows, say on a 1 hour or even a 15-minute, is non-farm payroll day. So, we're going to see probably lackluster markets for the next 24 hours or so. If we see a lower high, lower low sequence on the 1 hour, we could potentially trade it back to the base. But realistically, we're going to be governed by the market movement here. So I think the zones are pretty strong. You can see here on the daily, it's effectively right in the middle of that zone. If we stick to that, the 20 moving average is going to help stop it going any further as well in the short term. So realistically, both of them are trapped, the short and the long here, but they are giving you both a trading opportunity to get in if we get a small time frame reversal. So a series of high highs and higher lows in a 15-minute or a 1 hour, and we can trade this zone until we get the non-farm payroll figures and look at it again with fresh eyes on Monday. All right, we'll move on over to the US dollar CAD. Look, this one, again, has been a bit of the star of the show. Realistically, we know this level is pretty strong. The 130.80 area has been a bit of a stronghold for it. It's reversed off there several times now. So we weren't going to be surprised that it actually did sell off again from that level. And then when you look at it, how to trade that particular setup, you've got to go down to the smaller time frames, really. That's the thing. That we've got very strong resistance up above at around that 130.80. So what you're really looking for is a weakness in the smaller time frame when it does get up there, and that weakness came around this area here. Once we made that series of lower highs and lower lows, basically on this candle here, we were able to start shorting it, and that was a pretty good move too. We've been able to get about 20 or 30 pips. It's still scalping because realistically, you look at it on a daily, and the logical target for this to get back to is around that 128.70 area. If it reverses from this point on and then actually starts to push up again, that's going to bode well for a potential break to the long side, okay? So realistically, for this to break long, it needs to come from a base that's not all the way down here. It would need to reverse around this area here. This is also a roll reversal zone, by the way. You've got resistance at this point here and that point there. So ideally, in a perfect world, it would reverse around that 129.50. I'll pop a horizontal there for us. So around that 129.50 is the area that you'd want it to reverse. Because that is an area of roll reversal. So if it turned around here and did a series of small higher high and higher low sequences on a 1 hour or 4 hour time frame, this level is more likely to get broken. and then upwards from there. So realistically, pretty easy trading on this one as well, really. If you get a small time frame change of trend, trade it back up to the highs of 130.80, but just be mindful that this might be the one that breaks through, because that's coming back from a better base. It's going to launch from a better base here. But if indeed it breaks past this resistance, the 20 moving average is the next catch point, which is around that low 129. So realistically, once again, especially on a non-farm payroll, we're going to be doing all sorts of scalping opportunities, not anything long-term. And then eventually, there are two ways to play this. When it does eventually break past the 130.80, when it comes back and retests it, that's when we'll be looking to going long, basically to whatever it really wants to take us there. Like we're talking about hundreds of pips from that point onwards. Or if it breaks below the 128.60 area here, then we're going to start targeting those lower 127 area and even further down to the 125. So it's going to be a wait and see on the CAD, but at the moment I think it presents itself as a good scalping opportunity, and both zones are very clearly defined. So yeah, pretty good trading on the CAD as well. All right, onto the US dollar yen. This one, look, has failed to really live up to the heights of the dollar strength. Obviously, you can see that we've been basically a bit stagnant for the last week. We've had very small trading range. You can see here we've been only really... it's lucky to have moved 100 pips, and it's starting to waver a little bit, and that does start to concern me a little bit for the long. I think that really what we're probably looking for is an opportunity for this to break down past the 20 moving or below the 20 moving average and start to short it back down to the 131. Actually, it's probably my preferred trade. Look, a move long, it needs to break the 136.70 area for mine on a daily candle. If it does that on a daily, I'll be convinced that we could potentially be moving longer, but it has to do that, and realistically, it hasn't really looked like it this week. And if it was going to, I would have thought this week would have been the one with the dollar index approaching 107. So it hasn't done that, and it's shown a sign really to me. Like you go to the smaller time frames, it's going to be pretty sideways, as you can see. The 4 hour there is very sideways, and the 1 hour obviously is the same. So for mine, if we get a break below this level here, we know it's a little mini roll reversal zone. A break below the 134.80, that would put all the moving averages behind it, and I think we can start targeting the 130-150 area again. That's probably the first point of call right through there, and then on to the 131. It's still a bit to play out for that to happen. We need a daily close, obviously, below the 20 moving average, and that coincides with that level, the 134.80. If we get a close below 134.80 on a daily, that will equal no doubt a lightning bolt on the 4 hour, and then we should start to look for that weakness. That's the preferred trade here. I think this is starting to show a little bit of a weakening to that effect. But again, a daily break above the 136.80 area, and then all of a sudden we're looking long again, and from here it could go basically anywhere. So, but I wouldn't trade that on the first break. I'd wait for it to come back and test it from above, a bit like the CAD. Let it do its thing, and then when it does, get involved. Right, we don't want to be the first of the races here. But a break below the 20 moving average, I think it really exposes it down to here on the daily, around to that 130-150, and a break above 136.80, and we can start looking at long opportunities from there. But pretty sideways sort of trading. It's probably been a bit difficult this week to really get anything out of it. All right, we'll go to the dollar index, and obviously this has been the star of the show. You can see we've seen some big moves, creating basically not all-time highs, but very recent highs. Obviously, 106.80 basically is the tipping point for it. I'll get the crosshair up, and you can see that it all but reached the 107. This is basically destroyed the euro, as we know. And you know what, you look at it and you say, well, this is looking really strong. I mean, there's no real sign that it's actually showing any weakness whatsoever. And the pullbacks have been perfect. I mean, that pullback to the 20 moving average was just spot on. And it's just basically launched right through there and pushed onto the new highs. But of course, the euro is the one we probably really want to be concentrating on here. This pattern has broken now. All the signs were here. We've talked about it over the last few weeks. It looked like it was weakening, and it certainly did that at this point here. Once it broke down past the 104.80, that key level that I said, once that's broken, we knew we were in trouble on the euro. And it's trading at, almost 101 now. Like it's basically, really pushing down. I'll actually bring that down a little bit. The all-important parity is not that far away. We're only talking about, well, when I say parity, we're talking about $1. So realistically, it's only, we're talking a very, very small amount, about 150 pips from here. Yeah, can it do it? Look, the dollar index looks like it wants to go higher, and if it does, that's going to push this down. There's no question about that. That's a direct correlation. You look at the MACD, Sigma is well and truly in the histogram, like it's getting belted. So yeah, it's very very difficult to see this stopping here. That said, if you're not already involved in the short, it's a pretty precarious area to get involved in. But the only reason I would be getting in is if it does start to do a series of lower highs and lower lows on a 1 hour again and continue the motion down. That's a 30-minute. We go to the 1 hour. If we start to see a series of lower highs and lower lows again, I'd be trading pullbacks to the 20 moving average and then trying to get involved in the shorting opportunities from that point onwards. That's how I would trade this one. Long is going to be a very difficult proposition for me. I mean, really, you're trying to pick a bottom on a thing that's falling like a knife. That's a very, very dangerous game. I wouldn't be touching it long, actually, even if it did reverse until it's actually reversed and see a series of higher highs and higher lows on a daily. That's the only thing that's going to get me involved in the euro. It looks sick at the moment, and the best way to play it is in the direction of the prevailing trend, of course. So wait for a bit of a pullback to the 20 moving average on a smaller time frame, and then I think you can potentially get involved. At the very least, probably to the $1 mark. If we get to the dollar, then we'll have to reassess. That's really in a territory that is basically uncharted for a very, very long time. We haven't seen a parity event of this significance, so it'll be very interesting to see what it does if it gets there, and then we'll have to reassess. But that's the trade is probably to that point on pullbacks from the 20. Going long is a very difficult proposition, and I think fraught with quite a bit of danger, especially because it is a very serious counter trend at this point, especially when you're looking at the dollar index strength. All right, we'll look at the S&P 500 as our last resort. This one here is basically doing what you would expect it to do if it's going to go long. Okay, so I know we're waiting for non-farm payroll results tonight, so that's always a bit of a funny sort of day. But you can see we've seen a lot of strength this week. It definitely tried to test the bottoms on Tuesday, no doubt about that. Yeah, we had a public holiday. It was 4th of July on Monday in the US, and Tuesday came out with a bang, but absolutely reversed everything and is looking really, really strong ever since. It's in the zone now where it's going to be a very, very interesting move in either direction. If it fails to make this high here at the 39.50 and starts to weaken and test this bottom boundary again at 37.40, it's going to look very, very likely that it's going to start pushing down to the recent lows again, and maybe down to the 3,500, which is the level that a lot of people are actually thinking it was going to get to. If it does the other way and actually breaks up above the 39.50 and actually closes with a daily, that's going to be a very significant situation, because then we've got a series of higher highs and higher lows on the daily chart, which has effectively reversed the trend, and the midterm prevailing trend will then be long from that point onwards. So that may be the bottom at that point. We might have seen the recent bottom, and we'd be looking for longing opportunities back up to the 41.50 or even 4100 in the first instance. The 41.50 is a very strong level, as you can see. So a break above the this level here, which is around the 39.50 area on the daily chart, is going to bode very, very strongly for a move up into the low 4,000s again. So that's going to be a very significant push. It needs to break the 50 moving average at that point as well, but I think that a lightning bolt certainly supersedes that resistance. And MACD is certainly not indicating any sign of weakness at this point. You can see we had a very, very big turnaround. Again, though, if it does fail to reach this height, or if it gets up here and turns around and starts to weaken on the smaller time frames, and we see a series of lower highs and lower lows, that's a very different story again, of course. And then at that point, we're going to start looking at potential shorting opportunities back down to here. I think it can go either way. I'm not convinced either way on it yet, but I'll be very convinced of a move up if we do get a daily close up here. So it's really up to the market action. We'll see what the non-farm payroll results do to the market tonight, and I think it's going to be a very interesting trading week next week. So I hope everyone's had a profitable week. We've seen some really, really big moves on some of the things that we talk about all the time, so hopefully you're able to catch some of those. Have a great weekend, and I'll talk to you all next week.